Hey traders, this is Christian Fromhertz with Tribeca Trade Group with your weekend video, getting you ready for the work week. I will start with looking at the major indices, and we'll also talk about some areas of the market to watch for next week, a couple different sectors to keep an eye on, and also the most interesting option activity from last week. Let's dig in. I'm also going to be going over some finer points in my weekend newsletter, but price action from last week. Obviously, we all know what happened on Wednesday, big move down. And then Thursday and Friday, a nice reclaim. The last video that I shot, I think, was on Thursday night. And I was talking about that we had a nice little partial recovery and a bounce back from the morning's lows. And I mentioned, I think the phrase that I used was Rome wasn't built in a day. And certainly on Friday, we had a nice recovery back as well until we got another political headline. But I'm going to get to the political stuff in a minute. It's something that we want to try to ignore as much as possible as traders. But when there's headlines every day, or it seems like it's every 3 days, these are things that you have to be a little bit cognizant that you may have some short-term volatility when we do get those type of headlines. So anyway, I think the S&P chart, I think it looks pretty good. Of course, we've got more progress to make. I think we're going to be at 52 week highs. Again, this is a prediction, which I guess sometimes we feel compelled to make, but I'll just leave it at this. I like the price action back above the 50-day moving average and above these shorter term moving averages. If we can stay above there, I think we've got a chance to continue up into the right. Looking at a little bit shorter term, I always like to look, especially in the beginning of the week, how the value areas are setting up for the week, because they often provide some really interesting support and resistance levels. So first of all, what is the S&P implying for next week based on a straddle of next week's options? About 90 basis points. So not a huge move. I think it's a little bit larger of a move going in than it was going into last week. I think it was only about 75, 80 basis points going into last week. This week it's a little bit more. It's 90 basis points with the VIX up. I think that makes a little bit VIX higher than it was the previous week. I think that makes perfect sense. I've got a lot of moving averages on my charts. This is the 200. This is the 50. These are the short term. But what I wanted to illustrate from last week is the break of the value area retest. This is very textbook trading using value areas. So a break of value, a retest, and a fail to get back in here, and then basically good night. We went down pretty hard. We rallied back through the rest of the week, and on Friday, basically we ran into some resistance. We ran right into that area where we broke below, which is the weekly value area, or the week's value area, I should say. So where are we going to open up for next week? That's the most important thing, not so much a review of last week. It looks like we're going to open up, of course, S&P futures open up at 6 o'clock, but it looks like we're right around the point of control, this yellow line, which is where the majority of the volume happened from last week on an average basis. So starting the week in value, the two levels to really watch, so it could be that we might have a little bit of a choppy market in the beginning until we really break 2394 or 2355. Those are the two levels that I always start to look for barriers. The SPY is a little bit different, but 240.55 and 236.84. I would write down these levels. Those are the levels that you're going to watch for a break of support or a break of resistance to the upside. You could also notice that the MAC is almost about to cross over for a bearish signal. But as I've mentioned, that these value areas really act as good support. Once we start the week in value, it becomes a little bit harder for us to rally or break down. But those two levels will tell me otherwise. So again, watch those two bottom of value. Again, it's going to look a little bit different on S&P. We don't actually see a crossover happening quite yet, but we'll see how that runs this evening. In terms of the Qs, we'll spend just a little bit of time on the Qs chart. This was a little bit stronger, last week, as it's been all through the last few months. It also tried to close much higher on Friday, but those political headlines kind of kept us down. The price action is right above the my yellow line, which is the 5 period exponential moving average, and a good sign if we can continue to if the price action remains above there. So that's what I'm watching for next week, considering how strong the cues have been. The IWM is kind of more of a mess, I would say. We're in value versus above value for S&P and Qs. The small caps IWM is basically in value. I would watch right around 137 and a half to the upside and 130, call it 133.85, I would say, to the downside. That's your support and that's your resistance for small caps. Really don't know which way these are going to go, and I'm waiting for price confirmation to say, hey, we're going to get back above value and maybe go up and to the right or break below. But small caps sometimes could be a leading indicator, so keep your eye on the small caps for next week. Next, we'll just briefly talk about the VIX. I think it's important to kind of mention this because every time well, I shouldn't say. Let me not. I don't want to get ahead of myself here, but um, you don't. It's trying to predict when you're actually going to get volatility. I think is a fool's game. I think what you really want to pay attention, not so much trying to predict a spike in volatility, but predict when, but take a look when, because things that we know with the VIX is that when the VIX gets to be about a 9 or 10, puts and insurance are extremely cheap. We know that. That is not a prediction. We know that when the VIX gets to be around 9, call it 9 through 11, puts are inexpensive. When the VIX gets to be a 15 or 16, the puts in the major indices or puts anywhere become more expensive. So do you want to be buying puts when the VIX is cheap, or when puts are cheap, or when puts are expensive? I would much rather buy them when they're cheap. I think whenever we get these short-term spikes in volatility, it's a great place to sell out of the money call spreads in VXX. VXX is a very, very flawed instrument. For me to kind of prove this to you, basically just look at a long-term chart of VXX. One thing that you could, with decent certainty, is you could see that it goes down over time. The VXX ETF was never really trading at 25,000. They have to keep giving it reverse splits every so often to bring the stock price back up. So I like to sell VXX whenever the VIX gets to be around the 15 area. So, that's a trade that I would be looking at for next week. But keep in mind the VIX did get back to. I think it closed. Let me see right here. Bring up a 5-minute chart. So we went all the way from a 1550 to basically down 12. So if it continues to kind of get into that 11 handle in the VIX, I think it's a great place to have some type of portfolio insurance on, because again, it's cheap to do that. And again, if you don't have that many positions on, or if you don't have that much exposure to the U.S. market, then that may not necessarily be for you. But if you want to be in the game and have some positions on, I think it makes perfect sense to have some protection on while it's cheap. That's just how trading works. You want to buy things when they're cheap and sell them when they get expensive. All right, so we covered the major indices and kind of I've given you my thoughts on those. My overall market view is still I hate to use the word cautiously bullish, but the reason why it's cautious is just because of these political headlines that we've got going on. They're going to cause, it's going to be a little bit of a knee-jerk reaction every time one of these articles, or whether there's actual events. I think Comey's supposed to testify right around Memorial Day weekend, so I would expect volatility to creep up into these events, and we have to be cognizant that that there are articles that are coming out essentially every 3 days with some he said she said type of things going on. So there will be bumps in the road, I believe. But I think overall, one of the things that I keep coming back to is that 75, for instance, earnings last week were really strong. There were many more beats than misses. And according to, I believe it's FactSet said this, was the fact that 75% of the companies have beat EPS estimates. I mean, this is a good thing. That's not a bad thing. That's not That's not bearish in my opinion. Also looking at what's going on globally, a lot of the major indices around the world are rallying. So, the last couple of years things have been stagnant in terms of global growth, and it seems like things are really starting to get better and to heal globally, especially in some of the bigger areas around the globe. So again, these are positive things, but it doesn't necessarily mean that we're going to get that we're completely out of the woods in terms of the politics going on right now. All right. So, in terms of sectors, we do also look under the hood with in terms of sectors. Of course, utilities, consumer staples, they got a little bit of a bid, especially on Wednesday, and a little bit of a move to safety last week. We talked about this in last week. This is how the sectors looked last week. Look at our momentum gauge. Consumer discretionary, industrials, healthcare. They all started to show that momentum was failing. It's a pretty good signal for what we encountered into Wednesday of last week. So our indicators been pretty good with saying, hey, when once momentum has a lot of falling on it, you want to be a little bit cautious. What is it saying this week? It's kind of a bit mixed. I think things have to play out a little bit. If you look at a couple sectors like XLK, which is technology, which has been one of the stronger areas of the U.S. market. If you look at a daily chart, you can see that there is a recent MACD bearish crossover. These things, especially once it's in bullish territory, are usually pretty short-lived. Sorry, not usually, but can be short-lived. But keep an eye on. We did get that. MAC bear crossover on Wednesday. We'll see if it neutralizes, and we'll see if we can get a crossover back to the bullish side. So keep an eye on that. A couple other sector charts to watch. Consumer discretionary. We actually got that bearish crossover prior to that about a week ago, before the Wednesday sell-off. So this was a pretty good indicator as well to kind of take some profits in this space. But looking at this consumer discretionary, which is also has been, besides tech, has been super strong. I think against the 50-day moving average, this purple line, I think a long makes sense in this space, especially in individual names, possibly like Amazon, which is the biggest weight in the consumer discretionary ETF. So I like Amazon right here. If it happens to come in a little bit more, I'll like it even more. But I'm long this, and I'm sticking with the trend of being long Amazon here. Also, healthcare try to get going here a couple times, and I would watch the top of value for the XLV chart. What I liked on Thursday was that biotech stocks outperformed pretty nicely. Unfortunately, on Friday they gave back a lot of the gains. But I think this is also, I guess this is maybe the phrase of the video, but this has also been a very bumpy sector because it seems to start to get going a little bit and then completely gets brought back. So just when you think healthcare and biotech seem want to get going and want to break out, and show some signs of life, then all of a sudden it gets squashed. So again, another group to keep an eye on, as some areas of biotech are definitely showing some signs of life. All right, so that's a quick sector review. I still think, even though there's some OPEC headlines, I still think energy is an avoid. It doesn't mean that we can't get a bear rally, but until these things get above the 200-day moving average, I really don't want to be. I really want to stay away from energy. A day trade is fine in counter trend trades, but really for swing trades, I want to see price get above the 200-day moving average, and it's not there. Another sector to keep an eye on is financials. We'll kind of look at this in terms of all the moving averages. Below the 100 and the 50-day moving average, they're kind of caught in the middle. And I said this in the newsletter this weekend. I really don't want to be in a group of stocks that is kind of caught between two different signal areas. It's below the 50 and the 100-day moving average. I think if it gets back above those two moving averages, I think longs are selective longs are definitely something to look at. And if it breaks below the 200-day moving average, then I think shorts might be, or or at least avoids would be something to look at. I should say shorts, not avoids. I think right now it's an avoid until it actually rallies above here or breaks below. So I really don't want to be involved in financials in this place at all. The one name that I think looks interesting, which we saw call activity last week, is Citigroup. It looks a lot more healthy than Goldman, Morgan, Bank of America, JP Morgan. This one I think is the only one where the price of the major banks, maybe there's one I'm leaving out here, but it's certainly one of the few that is above the 50-day moving average. So that's if you want to tiptoe into this space, I think Citigroup above the 50-day moving average is compelling. If it breaks below the 50, I don't want to be in it at all. So that's my quick view on sectors. ETF fund flows, which I did. You could actually go to our website and you can download the report. This is right on the Tribeca Trade Group site. You could go right to market posts. My internet's a little bit slow today. You could see our whole weekly flow report. So that's free. You could download that. Basically, what it's been showing, the grand theme here is for the last 3 weeks, there has been a consistent theme of money going into international equities and going out of domestic or U.S. equities. Last week, it was another $5.4 billion that went into international ETFs and $6.3 billion out of U.S. equities. It hasn't been one for one every week, but you could see the flows into international equities, 5.4 billion last week, 5.6 billion the week before, and 5.4 billion the week before that. It's been very consistent. I mean, we're talking within a couple $100 million that it's been differing between from week to week the last 3 weeks, and essentially where in international markets has it been going into? It's kind of going back and forth between emerging markets and developed. I think for the last 2 weeks, developed international markets have been seeing more inflows. What are these? What is developed markets, international markets? They're basically Europe, Japan, Australia, areas like that. Also, if you couple this with Europe, look at the inflows to Europe last week. It just continues. This has been going on now for the last 2 months. It's just a lot of new money that's being put to work in Europe. So ETFs like VGK, FEZ, FEZ, and EZU. Those are the 3 ETFs that are seeing the lion's share of the inflows from week to week. Also, EWG also saw some inflows as well. Brazil was the big story besides the U.S. market falling on Wednesday. Brazil was down significantly last week. Also, political headlines there for them, and it's always interesting to me to see where the money, if people are withdrawing money or if they're actually putting it to work on a dip. And you should be able to see this. Yeah, so this was like record volume for the EWZ, the Brazil ETF last week. And this was on Thursday. That news came out after the close on Wednesday. And take a look at this big green bar. That's an inflow going in. So that was $345 million of money that actually somebody bought on the dip. And you can it kind of makes sense of looking at the price action. It bottomed on Thursday and has been moving up since then. A couple things to note with that ETF. Let me just go back to my newsletter. Couple things to note. Number one is that inflow of like I said, I think it was $350 million of inflows on Friday, buying the dip, and then also taking a look at, we look at things called VPOCs, Virgin Point of Controls, and it looks like the price action went far enough down to find this area where buyers and sellers had previously met up. The price action fell to there, and it acted as a magnet, and then price came back up. So once price revisits it, it usually reverts back, which is exactly what it did. Other areas of the market that I'm watching, I see that the videos now we're running upon 20 minutes, so I want to pick up the pace a little bit. But I added a position in the euro. I think if you're long U.S. equities, having some type of exposure to the euro, having something that doesn't have the same is not highly correlated to U.S. equities is is a nice trade right now. So I've been talking about the euro since it broke the 200-day moving average. Uh, for basically about a week. I was a little bit late in putting on a trade, but I wanted to at least start something here in FXE. Why I like the euro long is, first of all, we got a nice signal in the 200-day moving average, and I'll remain long as it's above the 200-day moving average. But also, if you look at a 5-year chart, you could see that now that the price action is firmly above the 200, who knows? We could see a nice retracement. Don't know, but I'll give this a shot as long as the price is above the 200 day, and we'll see how long the trend goes. Again, we never know how long the trend is going to last. Nobody can predict how long the trend is going to last, but it certainly seems like it's worth a shot above the 200-day moving average. A couple other areas that I looked at was SPLV. Hack, which saw a lot of volume last week. In my opinion, whenever there's a cyber attack, if you happen to be in these stocks, congratulations. But I don't like to chase the price action once there's a cyber attack. The price action will usually revert back after the attack has. After the news of the attack has come out, and certainly you could see that with the price action getting high, and then some inflows on that gap up, and then a reversion back. So as long as it's above the 50-day moving average, I think it's interesting here. A couple other ETFs just to kind of point out to you. What I think has been the best performer, or one of the best performers in performance as far as a whole group, which I talked about in last week's newsletter, so I didn't feature it again. But Chinese internet stocks, I think this group is up around 30% year to date. A lot of these stocks have just been absolutely on fire. I know a lot of people look at Alibaba, but we've been seeing a lot of call activity in other names in the space. You could see if you kind of break apart or look at the holdings. JD is another one that did really well on earnings. Baidu is in here, which I think a lot of traders are looking for Baidu to finally break out. Hasn't happened yet, but I think a lot of people have their eye on it. But names like Momo, Weibo, these have really been moving quite nicely to the upside. So this is an area that while it's moving up and while there's a lot of momentum, I want to be in some of these names, and I do have some holdings in this space. There's one other group. Oh, yes. I'm also long Indonesia stocks. There was some news out last week, which again really didn't get a lot of press because the press is focused on U.S. And not so much international. But the S&P did up the classification of Indonesia stocks. I think they marked them as stable last week, so that can sometimes lend to investment into a country. So I've been long EIDO since it broke the 200-day moving average, and I'm going to continue to be long here. But again, some of these stories they just don't make it to the front headlines. So that's what I try to do. That's our review of the newsletter. Just, I did mention I was going to talk about maybe about 10 signals that I thought were interesting in unusual option activity. I'll start with last Monday, which seems like a long time ago considering the big sell-off or the volatility. I wouldn't say big sell-off, but the volatility that we saw on Wednesday. Corvo, we saw a repeat call buying in this one. Some was short dated, May options have already expired, but take a look at the chart in Corvo. Looks pretty interesting, and like I said, we did see, you're going to see it come up again on my report. Really nice break above the 50-day moving average in QRVO. 5-year chart, it still hasn't, it's not a 5-year high, so may have some more room to the upside to go. What else from last Monday? NVIDIA, we saw calls, this name has continued to power past or to rally after it had earnings. So, wow, I mean, look at this thing, 136, and buyers are still buying it. We're still seeing a lot of option flow in the name. So keep an eye on that. Keep an eye on AMD as well, and also the whole semi space. We saw a nice buyer, longer dated Coca-Cola calls going out to November. Again, this was Monday's flow. This was Tuesday's flow. And again, we see Corvo coming up. This time it was June calls. IBN, which is the way that I'm playing the rally in India. This is a India bank. Again, this is a 5-year chart, but you could see I've been long since the break of the 200, the break of the 50-day moving average. So I've been long a couple months now in IBN, and it's finally starting to react pretty well. I think I got long someplace in here. Excuse me, right around here, not that far back. So we did see. So the point is, we did see some aggressive call buying in that name, going all the way out to January 2019. So long-term trade. I mentioned City already. What kind of caught my eye, and again, this is why I like to look at unusual option activity or aggressive, as I like to refer to it, aggressive option activity, is because sometimes it alerts you to something. Like I really wasn't looking for a trade in Citigroup, but I looked at the chart and said, "Hey, the Citigroup chart looks a lot more healthy than some of the other banks, some of the other money center banks." So that's the whole thing for me is trying to looking for ideas by reading the tape. So we already talked about that one in detail. Micron, we saw some calls. Note they report earnings. Most of the call buying that's been occurring in Micron has been right around their earnings report. A lot of calls going out to 622 and 629. Note they report on 621. Momo, which you're going to see this again, I talked about that one already, but a Chinese internet name. Here it is again, more call buying. A lot of next week's call buying in this one. Also WB, a lot of call buying in this Chinese internet. Win, really nice dip buyer last week. These hotels and travel names have really have caught a lot of attention of call buyers. So last week we saw a little bit of a dip, and I mean not even that much. We're going to go to a 6 month chart, but just a small dip and a big buyer came in on that dip, and you could see the price action behaved pretty well after that call buyer came in. That was a trade that I took last week, and I think I'm 90% out of the trade for nice profits. YRCW, one of the biggest trades that I've ever seen for YRCW. Price acted very well after this call buyer. May have some more upside. These were June 8 calls, but 9,600 contracts that traded in this name. Where's my Thinkorswim chart? You could see what this thing did. Again, not it doesn't really fit. I did not take this trade. I'm always honest whether or not I took trades, even if they, I mentioned this in the trading room, but it just doesn't fit my model. It doesn't fit my model because it's underneath the 200-day moving average. Sometimes I'll take names that are underneath the 200-day moving average for a day trade, but for counter trend trades, if I'm going to play them, it's going to be pretty small. But I have no position in this one. Didn't take it. Fez, we've already talked about the buying that's going on in Europe. Nice big call buyer. August 40 calls. Bud also saw a lot of calls go up on the dip as well last week. And then also NLCH. These were trades that I think we saw. This was on Tuesday. So we saw Bud and we also saw NLCH, another travel name. Let me just keep going. Sorry, this was apologies. This was Wednesday's price action option activity, which was really small on the call side, which we just really didn't see a lot of buyers come back in on Wednesday. Sometimes they're a little bit hesitant. We also didn't see a lot of pushing to the downside. We didn't see a lot of put buyers really buy a lot of really try to press on the short side either. You can see there was a handful of trades, both calls and puts. So sorry, I had my days confused. But Thursday is where we saw a little bit more. Bud was a dip buyer. NCLH was also a dip buyer as well. And then Friday's activity was a little bit. I would say a tiny bit better than Thursdays. We saw a nice aggressive buyer of PayPal. We also saw a lot of call buying going up in Nike. January, July, and October calls all purchased aggressively. I tried this trade on Friday. As I just mentioned, I don't like it. Doesn't fit my model. Nike does not fit my model, so I don't have a swing trade on in it. I think it's interesting. There's probably some support back here. If we go to a 1 year chart, there's a little bit of support back here, but I don't like to play longs below the 200-day moving average. So I tried it for a day trade. I hit one price target in it, but it was really basically a flat or scratch trade for me. So again, maybe keep an eye on it. I just don't like it below the 200-day moving average. Maybe it rallies up to the 200, but I certainly want to bring it up because that was probably the most interesting option activity that we saw on Friday. Also AMBA, this one I did put on a cash position on in AMBA. Why did I do it in cash? Because the option volatility has always been very high in this semi name. But my signal is the 200-day moving average with this one. And again, not a name that I had been watching, even probably looked at in a couple months, but to see some call buying in it, I looked at the chart and said, hey, this looks interesting to me, considering it was once $120 stock and the price is above the 200. I don't know how long the price is going to be above the 200, but I'm going to give it a shot here. So I went long AMBA in cash. So that's the end of our newsletter, our video. If you're not a member, we do have a systematic cash trading portfolio. It's all based on systematic signals. So you have to be a member to see all of our positions. From time to time in these videos, I mention a position or two, but to see the whole portfolio and all the prices that we have, every position that I put on, I know the stop price already as I'm entering into the trade. So that's the beauty of having a systematic approach. I have much more faith in my model than any one particular trade. So that's it for today's video. Have enjoy the rest of your weekend, and I'll see you guys bright and early for the Monday morning breakdown of international markets. Thanks, everybody. Have a great weekend.